Richard's got his coffee, and buenos dias.
Buenos dias.
You actually sound really Spanish too.
Así
That's
es.
crazy. Wow, very authentic. So you're pretty much fluent all the way in Spanish?
Crecí en Latinoamérica, en Honduras, por 8 años.
Oh shit.
En Perú,
Wow.
también, todas partes.
Wow.
But yeah, I basically grew up all over the place.
So you were in all these hot countries, eh?
Oh yeah, totally.
You like it?
Yeah, it was awesome.
So you're probably more entrenched in Spanish culture than in Canadian culture,
I think,
perhaps?
I feel pretty Canadian, but you can definitely get along with the Latin vibes. Yeah, a couple friends, like good solid friends that are Latin speaking, like fluent.
You're speaking Spanish to them?
Yeah, I speak mostly Spanish at home, like with my brother and my sister.
What?
We do like Spanglish, yeah.
What?
Yeah.
That's sick. Spanish music? Mm-hmm. Oh my
Salsa,
goodness.
a little reggaeton.
Hey guys, what's up? It's your man Pete. This is Selling Toronto, and I've got another very special guest today. I haven't had a mortgage person on the show before, but I've got a really cool one today. His name is Richard Tartaglia, and he's with the Vine Group,
yeah.
and which is also affiliated with Mortgage Alliance. Yeah. Today we're going to talk a little bit about the difference between working with a mortgage agent and a mortgage broker. I think there might be some confusion. I mean, there's a lot of confusion in the real estate industry in general for people. I wanted to explain to you what the benefits are and what the difference is working with somebody who's like Richard, who's going to be working with you versus just going into a branch and into a bank and just asking for a mortgage. Let's just drive.
Cool.
Seatbelt if you don't mind, sir. Tell us what the difference is between working with a mortgage agent or mortgage broker versus just going with a conventional bank like a TD or a Scotiabank or BMO or something like that.
I think I kind of want to step back a little bit.
Sure.
Tell you a little bit about my background and how I came to be where I am.
Sure.
I did 6 years of mortgage lending at the bank as a mortgage advisor, as an investment advisor, I did a financial planner role.
Okay.
Ever since I graduated from economics in Hamilton,
Yeah.
McMaster.
Yeah.
Like I kind of moved into this role after having built up all my experience with the bank a long time ago. And,
Sounds like you have a lot of experience at the bank, right?
yeah, at the retail branches. So when you walk into a retail branch, you're going to get a certain, type of conversation. It's a conversation that is tailored towards that bank's product. So
Right.
you're going to be limited to what that bank's going to be able to offer you. When you deal with a broker, you're dealing with somebody who's self-employed. You don't pay for them to offer you their services. The lender pays the broker.
The lender pays the broker. Okay, so it's kind of like in real estate where the seller pays the agent, not the buyers. They don't pay the commission to the agents at all. It's the sellers that pay, right? What do you guys have access to? What can you do that's going to benefit the consumer if they were to, call you up and work with you, Richard?
Being part of Vine Group, we have access to top tier status with the lenders. We did over 1.5 billion in mortgage lending in the last 2 years.
Wow. That's a lot of mortgages.
We automatically get the top tier status because we pool our resources under one name, Vine Group. Basically, we approach the bank as this volume kind of wholesale distributor of mortgages because we operate independently to the bank.
Right.
But we can, push mortgages into the bank and we don't have costs associated with it. But it's it's not all about rate. It's about the whole conversation about your financial plan, your
credit, all that kind of stuff.
Yeah,
right?
totally. What types of prepayment privileges you have with the mortgage. It's more of a holistic conversation with a broker. There's a lot of mixed views on what brokers can do.
Okay.
As a mortgage broker. Back in the day, brokers only had access to posted rates.
Oh, so there was no flexibility at all?
No. So now, since the cost structure has changed for the banks, real estate prices have gone up. Brokers have access to fully discounted rates, and so you hear a lot of mixed themes about what brokers can do versus branches can do.
Right.
People have different experiences, and it really depends on who you deal with. And you have to be comfortable, just like your business, with who you're dealing with. You have to have a level of trust with that. It's more about the financial plan and how each product may fit that type of borrower. So whether you're a real estate investor, you're your first time home buyer, or you're looking to get your second property, cottage, you may want to have different types of prepayment privileges for that mortgage. And it's not just about prepayment privileges either. It's about your portability. Is it transferable? Is it what's the penalty like? How does that lender calculate what the penalty is going to be, do they base that penalty on posted rates, or do they base it on their contract rates? Variable mortgages generally have a penalty of 3 months interest.
3 months interest, just interest.
3 months interest, yeah.
Yeah, no, let's say you got a job somewhere else, right? And you really had to sell your place and you had to, you know, break your mortgage next year. Would that be the same as, you know, if you were to break it, maybe if you only had 1 year left on the mortgage? Like, what's your take on that?
It's based on the principal. Like, it depends what your principal is at that time. If it's a fixed rate mortgage, it's going to be based on the remaining time you have on the mortgage.
Okay.
Whatever current interest rates are at that time, and the discount that you received at that time. So that'll be the interest rate differential calculation, which is one of the penalties on a fixed rate mortgage. So it'll be the greater of the two if it's a fixed rate. Greater of the 3 months interest cost or the interest rate differential. So fixed rate penalties are usually larger than variable rate penalties.
So what would you recommend for the young home buyer today that wants to buy their first house? Like, what type of mortgage would you recommend that they go for?
So that is really about the borrower and what that individual is comfortable with. It's not right to give somebody a mortgage that they're going to be worried about, like thinking about at night.
Right.
If they're going to be worried about interest rates going up, just go fixed. And with a fixed rate, you can actually qualify for a larger amount if you go 5-year fixed.
Oh, really? You can qualify for a higher amount? Oh, wow. But then your monthly payment's going to be a lot higher, right?
Yeah, it'll be a lot higher. You may have to take a 25-year, depending on the deal. Yeah, it's a conversation to be had, and your mortgage advisor should be having that conversation. It's that holistic conversation. Does this fit for you? But you know, whoever it is, it should be a trusted broker with a reputation.
Well, I mean, and that's why we do these videos, right? We do these videos because we want to convey, you know, what we know. Because in our businesses, we're not really selling an actual product, right? I mean, we like to say that we're selling houses, but at the end of the day, we're really just selling our service and our expertise and our knowledge and our experience, right? And so that's why I, you know, created this show in the first place, so that we could show people what we actually know and how we can advise them and then sort of build that trust, right? I mean, like, what does a billboard or a business card really say about you, right? So that's why I created this show and these videos to, you know, sort of give people that information and that knowledge that they can use right away. And then also, if they're not working with anybody, then they can always work with us, because, you know, we're going to be a trusted source for them to go to. For people who are, you know, sort of just starting out, maybe they had bad credit previously, or they're really just trying to build up their credit, like they don't have spectacular credit, you know, can you still purchase a property? And sort of what's that borderline where, you know, you can sort of get a decent rate and decent terms versus you're just going to get thrown to a B lender or something like that? You know, what's that line?
The magic number that you want to stay above is 680.
680. Okay.
680 beacon score.
Okay.
How do you do that? You basically take mom and dad's advice. You pay off your revolving credit, make your minimum payments on your credit products every month, regardless of what the balance is. Try to pay it off in full if it's a credit card.
Right.
Lenders don't like to see excessive utilization of credit. On the bureau, it'll show up as an item if you're doing a credit application. But
it's okay to have a little bit of debt when you're applying for your mortgage. It's not like just because you have some debt doesn't mean you cannot apply for a mortgage, right?
That totally. I mean, if you have debt, it's going to take up capacity to borrow. Everyone in Canada can borrow up to a certain amount. There's different lenders have different guidelines, and it also depends on the mortgage and the down payment and also the property. So there's a whole kind of world out there about what amount you're going to get approved for. You know, you'll hear somebody goes into a bank, I got approved for X. I walked into my other bank, I got approved for X. I walked to a broker, I got approved for X. It depends on the lender, and it's important to have a very experienced broker that knows how to get you what it is you're looking for, especially at the pre-approval stage.
Right. And how long do you have to be working at your job for?
For salary, you want to be at least 3 months working. Generally,
3 months? I thought it was like maybe 6 months or a year.
It depends on the lender, but it could, I would say at least 3 months before really trying to find that property that you're looking at buying.
Okay. So once you've gotten past probation period, I guess, or something like that?
Yeah, so different lenders, different policies, but for the most part, that's the general rule of thumb. Have at least three months being employed for a salary position. If you're self-employed, generally with an A lender, so a bank or a big credit union or a monoline lender, you want to have 2 years of self-employed income. So if you're entrepreneur, you want to basically...
You answered my question. You answered my next question.
Yeah.
Self-employed and entrepreneur. So 2 years of notice of assessment in a way?
Yeah, 2 years notice of assessment, T1 generals. You want to have all your government debt paid off. The lenders don't like seeing government debt because at the end of the day, if anything were to happen to your property, if you bought a place, the government can actually come after your property and take it to cover back taxes on income.
Oh, wow. Okay.
Or whatever taxes they're owing. So they'll actually take favor over the lenders. The lenders don't like to see taxes on it. It's like the number one kind of bad debt.
And sometimes I think they'll, even before processing a mortgage, they might even ask you to pay that first before they'll lend you the funds, right? The mortgage?
Yeah, definitely. Yeah. That's usually a condition. Confirmed property taxes are paid, or income taxes, whatever. Entrepreneurs and self-employed, your income is as good as a salaried income, so long as you can prove that it's there. We'll use the average of the last 2 years.
Right.
If last year's income is lower than the year before, we'll use that income. Yeah, generally, lenders want to see your self-employed income going up, and it's as good as income as any.
So the problem with self-employed is that, when you're self-employed, you actually want to reduce your tax bill, right? So everyone's trying to report as low income as possible. But then that sort of works against you applying and getting the mortgage, right? So
there's interesting programs out there. There's net worth programs that'll let you borrow. There's self-employed programs that'll let you just declare your income. What is your income?
Oh, they still have that?
Yeah, it's out there. There's a lot of lenders that, the down payment requirements may change. It may be 75% maximum loan to value, so you'd have to put 25% down or 35% down,
right?
Depending on the lender. But there's really awesome programs out there for self-employed,
which applies to both of us, right?
Yeah.
Those programs. Hey, realtors out there.
Yeah.
That's the kind of program you're going to be looking for, right?
Yeah, and then there's exceptions to the 2-year guideline as well. Like if you have a year and a half, some decent deposits in your bank account in the last couple of months. They may look at the last 6 months bank account statements to show what's coming in. You still may get an exception with an A lender. You may not have to go B.
Right.
Provided that the beacon score is there, down payments there. Property makes sense. It's not like some crazy island property or something.
So the theme of this overall episode today, guys, is it depends on the lender. All right. So you definitely want to check with Richard or check with your respective mortgage agent to see if you qualify. Okay.
Yeah, it does depend on the lender for sure. There are some kind of basic guidelines that all lenders will adhere to, so we can speak kind of higher level to that. But that totally. When it comes to the nitty gritty, it definitely depends on the lender.
Yeah. And we've been through this many times with our clients where we thought that their situation was good enough to qualify, and then you bring the agreement of purchase and sale to the mortgage person, and they keep asking for more documents and requirements. It's not an easy process trying to qualify for a mortgage, guys. So it's always best. Yeah, it's stressful too. So it's always. I mean, things are a lot better now because it's such a fast industry, and everyone's really trying to push the mortgages and push real estate. So things are happening a lot faster now, but it's always best to have your ducks lined up and be really organized to get all your paperwork, all your history, and try to get all your government bills paid before you apply for a mortgage, okay, as much as you can. So last question for Richard today is, so what's the difference between a pre-qualification and an actual mortgage commitment, right? What's, like a lot of people seem to think that just because you get the pre-qualification that that's how much you're going to get, and you're automatically qualified. So could you clarify some of those questions that might be lingering in people's minds, or for people who've never done it before, what the difference is?
Okay, so I guess I'll start off with the most difficult kind of property type to qualify for, or pre-qualify for. We do a pre-positioning for rental properties.
Okay.
We can use the subject rental property's income to actually finance the loan. So we'll do a type of appraisal on the property. It's a Schedule A, it'll show market rent portion that we can use as, or if there's a lease in play, we can use that as proof of financing or pre-positioning. So when it comes to rental property, it's very difficult to actually pre-approve you because we don't know what that variable is, right? The income of the property. So rental properties, it's more of a pre-positioning, and then hopefully for every type of pre-position or pre-qualification, your advisor is looking at all of your income documents. So you want to make sure that everything is crystal clear, and that you get a formal pre-approval letter, or at least a conversation when it comes to rental properties about what amount you can qualify for, and then you want to make sure that they'll look at all the income documents, because with the way that the market is, a lot of the time, people have to go in with no conditions, right?
Yeah.
So pre-approval.
It's almost for the homeowner, right? So for someone who's buying for the first time, they don't really understand. They know they need to get a pre-qualification, but they think that is the actual mortgage that they're going to get, that they're going to qualify for, right? And also with housing prices constantly shifting these days, with prices going up because of bidding wars and bully offers and so forth, so what does that pre-qualification actually even mean in this market today?
So when you do a pre-approval or pre-qualification, the lender is going to go with very standard figures for that letter that they'll get you, your pre-approval letter, your pre-approved for X amount.
They're just taking your word for it, right? Like this is your, or are they actually looking at documents for pre-qualification?
You should be looking at, your lender should be looking at documents for pre-qualification. Very important,
right?
Because if like your pay stub shows some weird year-to-date value, or there's a value on there, it doesn't add up to what you're actually seeing your income is for the year. You should be getting a letter of employment up to date at the pre-approval stage, and really look at all your assets, all your liabilities, pull the credit bureau, and get a vetted pre-approval. You're pre-approved for an amount, say you're pre-approved for $500 or $500,000.
Yeah.
And you find yourself in a bidding war. Make sure you have the conversation about what you can stretch that to. That's when you want to really have financing conditions on the offer.
All right.
Because it's going to come down to the property itself, how far you can stretch those ratios with a particular lender. At that point, you may want to take that mortgage and go to a different lender that has ratios that can be stretched.
Yeah.
So it's important to have experienced advisor or broker where you can have other lenders available as a backup if you need to, if you're in that situation. If you have less than 20% down payment, you're
it's called high ratio, right?
Yeah, high ratio.
Is that when they apply the what do they call it? The stress test.
Yeah. So
it's only when you're under 20% down payment is you're gonna get that stress test applied to your mortgage, right?
Yeah.
And what's that rate again?
Right now it's 4.64 benchmark rate.
4.64.
And then you have to qualify at a 25-year amortization. So the payment's a lot higher. You're going to approve for a lot less if you have a less than a 20% down payment.
So you can't get 30, right?
30-year, no.
But with the 20% down payment, you can.
You put 20% down, you can get 30 years. Yeah.
You get 30 years. Okay. How about for investors? What's the max amortization that they can get currently?
You can go 30-year.
As an investor?
Yeah.
Really?
Yeah.
Okay.
There's actually 35 years still available.
Really?
Yeah. And it's still available.
Just not offered.
There's a bit of a premium on the rate, so you may see it right now at about 3.1.
Okay.
But really cool product for investors that are looking to get cash flow from their property. So you get a large amortization. Investment properties nowadays, tough to get a cash flowing property.
Yeah.
Like you're going to be far-fetched if you're putting a 20%. You're not going to get to a cash flow property in the GTA for 20% down.
Yeah, you might have to look to Oshawa, guys. So that's exactly what we did with one of our clients. They had a 30%. Sorry, they had a 30-year amortization, and it made a huge difference in their cash flow. I mean, the property was cash flowing already because I'm good at finding those properties. Secondly, it was they were lucky. They scored and they got a 30-year amortization, and those numbers really worked very well. I think they're cash flowing like $1,000 a month or something on their property in Oshawa.
Wow.
Which is exceptional. It's really hard to find in this market today. But I mean, the market market is a bit softer right now, so there are some opportunities. So I would continue to keep looking if you are an investor, and I would take this soft spot as a buying opportunity because the long-term trend is still going to be good for real estate in Toronto and the GTA region. What kind of interest rate could we expect today that would be, the most preferential in your opinion? And if their conditions are all good, right? Like, what kind of rate are we looking at?
Variable should be able to get like straightforward rate, 2.15.
Whew. Gosh, that's cheap.
Yeah, 20% down. Fixed right now, maybe 2.69, 2.64. That'd be a big bank lender.
Wow. So how about B lenders? What are we looking at with B lenders?
B lenders are mid to high threes.
Mid to high threes.
Yeah.
Okay. So,
or low fours. Those will come with a lender fee as well.
of
So
course,
the lender's going to charge a fee up front.
Yeah.
And that may be somebody with bruised credit, property types out of whack. Or,
They'll probably charge you for the appraisal as well too, right?
oh, yeah.
Yeah. But if you go with a traditional bank, then is that covered? Is the appraisal cost covered, or?
So the brokers will cover your appraisal costs if it's a good broker. It comes out of their commission, right? Like they're self-employed. But I offer that.
The lenders never pay for it?
Some lenders do through brokers.
Yeah.
Depending on the deal and depending on the lender.
Of course.
Sometimes the lender will pay for it. If you go to a branch, generally branches will cover that for you. I like to cover it for clients because generally they can get appraisal covered with whoever they go to.
Right.
But my whole thing is, try to make myself as most competitive as I can. Rates are great on my end, and I always encourage my clients, like, go to your bank, see what they can do for you, see what the difference is. You're not tied to anybody. Shop and get your best rate and get the best product out there, and make sure you get something that fits with your whole plan.
So then that comes back to the whole benefit of working with a mortgage agent, right? Is that they're going to help you shop for the right rate and find you the right lender that's going to, give you the money to buy your home, right? So
yeah, I mean, a good one should give you options. It should say, this is what the monoline lenders are doing. This is what the banks are doing. This is bank A, bank B. If you're working with a mortgage agent who's not giving you that, ask them. Well, my whole thing is, I don't care how much I get paid. It's a people business that we're in, and us at Vine Group,
Well, that's it, guys. Well, I mean, we could talk a whole lot more, and that's usually how it is on this show. But it's really just a sampling to sort of give you an idea of what's out there in the marketplace today, who you can actually work with, who you can trust. So Richard is definitely one of those people who I came across, and he was introduced by a mutual friend, and we hit it off pretty good just over coffee, right? I mean, this show is about selling real estate, but it's also about selling the people who work in the city in the industry in real estate as well too. So I'd really like to thank Richard for coming onto the show and chatting about his expertise, and I think he's a very trustworthy person. And if you guys are interested, or if you have any questions, please, by all means, I'm going to put up his contact information in this video as well, so you can contact him directly about any questions you might have, whether it's for investments or your own home. Richard's going to be the guy that you're going to want to talk to when you're ready to buy a house. Hey, you know who's going to be helping you, right? So we'll see you guys in the next one, and thanks for coming on the show again. Really appreciate it, man. And maybe we'll do another one another time.
Yeah.
And that's it. Bye for now, guys. It's nice not doing the talking.
Yeah.
No pressure for me. I'm gonna keep it rolling, and you're just gonna keep it casual. So
Sure, yeah, you're gonna edit too.
Right, so. Oh yeah, I do tons of editing. Oops, sorry.
Oh, no worries.
All right. Where was your favorite country?
I was in Honduras for 8 years. Indonesia, Italy, Nicaragua.
So Indonesia was a little bit sort of out of the rhythm there. Circle back.
Property taxes, income taxes, corporate taxes on the business. It's taxes, government taxes.
Any kind of tax.
Nothing more certain than death and taxes.
A little nervous?
A little bit.
Yeah, that's okay.
I wasn't at a school for longer than 2 years.
Wow.
Yeah.
So was it hard making friends, or was it easy making friends?
It was pretty good. Yeah.
Yeah?
Yeah. It's had some tough times in high school, but
Really?
Yeah, like growing up with, I was like the gringo there, right?
Oh yeah, you really stand out there.
Yeah.
Oh, he actually speaks Spanish as well too. So for you Spanish-speaking clients, give him a call. That's it. Bye for now, guys. Can you say bye in Spanish?
Ciao. Or no, it's Italian. Bye. Or Hasta luego.
Hasta luego.